Imagine waking up to find that your silver investments have skyrocketed to $1,500 per ounce, offering you the opportunity to retire early. This isn't just a dream. According to renowned precious metals expert David Morgan, it's a real possibility on the horizon. With the dollar on the brink of collapse and silver poised to smash all-time highs, the next few months could be life-changing for silver holders. Stay with us as we unveil how this unprecedented rise could unfold and what it means for your financial future.
Paper, use a tally stick, whatever. So you see that come to the fore. And what we saw was the initiation of Bitcoin. It was the first cryptocurrency that came to be well known and still is. And the idea behind it was a libertarian's dream. I mean, you basically could be unbanked. You could do a peer-to-peer transaction. It was anonymous, and all the factors we like in a sound money system was provided by the white paper. And instead of being a physical commodity, it was a digital asset. And so the beginning, I think, started off very, very much in the idea of, hey, basically my dream, let's move the money power away from the banking elite into the pockets of humanity, into the common people. Let us have the money power. Let's take it away from the bankers. They use it as a control mechanism. But that's not what's taken place. It did initially, or it certainly looked like it. And as I wrote 10 years ago, my 2 bits about Bitcoin, I said the problem I see going forward is if it gains a lot of traction and it becomes popular enough, watch out, it'll probably be usurped by the bankers, and that's what's happened. So you basically see the MasterCard folks own a great deal of Bitcoin, and you get the maxis and all that. Look, I'm free market. You think Bitcoin's the only investment to own? Then go ahead. I wouldn't, but if you choose that path, that's your choice, and I support your choice. But I think it's lost its luster. So if Bitcoin is the answer, what is the question? The question is anonymity. Nope. You can track it and trace it. Is it quick peer-to-peer? Nope. Takes more time than most other competitors. Is it a real asset you can hold in your hand and pass on for generations like a gold coin? Nope. You got to have a computer and you've got to have some way to store it. It's got to be electronic. Is it ubiquitous where everybody understands it? Nope. But gold is. I mean, that's why they put a gold coin in the survival kit of a jet fighter pilot, because gold, no matter where you bail out, will buy you something. It is ubiquitous. So not to be a Bitcoin basher, I'm trying to be objective. I'm sure to the Bitcoiners, I don't sound it, but I love the idea in the beginning. And unfortunately, the question cannot be answered anymore. It used to maybe be an answer for freedom. And I think it's been usurped and it's not an answer to freedom anymore. And I'm sad to say that. Not that I'm a lover, I'm objective about it, or try to be. But are there other cryptos that will fill in? Yeah. But still, they aren't the same as a physical piece of metal. And they never will be. And I think that's important for people to know. I like the idea I could put $100,000 worth of gold and silver on my wallet and take it to another country and then demand physical delivery, pay the fees, pay whatever, because it's not free to mail it, ship it. But nonetheless, that could be done in the metals world today now, where that ability to do was not available until the crypto scene showed up. But maybe I over-answered it, but thanks for asking, because I want to be beneficial to everybody's thinking. I don't expect everyone to agree with mine, but I want them to see the transition that I went through, to see that a really good idea can be hacked, taken over, and yet some of the proponents are still squawking about its attributes that really don't exist anymore.
The silver market has been on an impressive rally recently, with prices hovering around $29.73 per ounce. This surge came after a softer than expected consumer price index, CPI, report in the United States, which caused U.S. yields to tumble, a positive signal for precious metals. To continue this bullish momentum, silver must clear critical levels at $29.79 and $30.00. These psychological barriers are key, as surpassing them could pave the way for silver to reach highs not seen since 2013, around $32.15, and potentially soar even higher. Currently, silver is showing strong momentum, as indicated by the Relative Strength Index, RSI. However, it's important to note that if prices fall below $29.00, key support levels will come into play at $28.75 and $28.00. The recent market behavior suggests that silver's upward trajectory is backed by solid technical fundamentals, setting the stage for a possible historic run. The market is also experiencing a lack of speculative appetite, which historically signals a prime opportunity for a bull run. When markets are quiet, with limited participation, they often set the foundation for significant moves. This absence of speculation, combined with the current bullish setup, suggests that silver could be on the verge of a breakout, leading to substantial gains for investors.
The idea that he who owns a gold makes the rules, that's pretty much been a fact for, for centuries. I mean, you get somebody as smart as Martin Armstrong, and he probably argue that point, but from a long-term perspective, it ebbs and it flows. You go from a gold standard, which isn't the best, but it's been one of the best, into morphing to a fiat standard that collapses, and then come back into a asset-based currency. So it kind of goes, and this is very broad brush. It's not the exact monetary history, certainly not, but it's sound money, non-sound money, failure, back to sound money, off sound money, failure, back to sound money. That's kind of the, again, broad brush view. So if that's the case, that for the next system to really work, we may be proposing a CBDC that doesn't work and needing to back by gold, and the East has most of the gold. And there's also a subset to that as a kind of a proof, like you're doing a proof on a math equation. And a proof is if you follow where the gold trail is, it's always the producing nation. So if you go back pre-US, where the US held most of the gold, it was held by Great Britain. And they were the main producers. Yes, it was a colonial system and all that, but under the UK umbrella, they produced the most and had the most gold. Then you go to World War II, and we, the US, produced the most production, and mostly the war machine, and then post the war, housing, cars, freeways, everything else. And all the gold, not all, but the lion's share of the gold went to the US. Now the lion's share of the gold has gone to China. So it just follows. You can say, well, wait a minute. If you just, follow the money, one of the best things we can do in journalism, it doesn't, get the personalities out, get the bias out, get the politics out. Just look at where the money's flowing. It's gone from the UK to the US to China. What does that mean? Well, it suggests strongly that you're right, that we're going to see the Chinese have the commanding, maybe not currency, maybe not global currency, but certainly a much higher status in the financial market or the monetary system than we see today. And if you take it a step further and look at their CBDC, which is by far the most advanced and most utilized in the world, maybe that's it. And they're just using their gold as a backup plan or as a subtle way to reinforce their power if they get resistance to it. I don't know. I don't know the future, but I do know what it looked like in the past. And as Mike Maloney says, the further you can look back, usually the more you could go forward. So there's my 2 cents.
Several key catalysts are driving silver's potential breakout, and understanding these factors can help us grasp why silver might be on the verge of an epic bull run. Firstly, the softer U.S. CPI report has been a major tailwind for silver. Lower than expected inflation figures have driven down U.S. yields, making precious metals like silver more attractive as safe haven investments. Another crucial factor is the lack of speculative positions in the silver futures market. Historically, a quiet market with low speculative activity often precedes powerful bullish movements. This setup creates an ideal environment for silver prices to surge, as there is plenty of room for new buying interest to drive prices higher. Moreover, silver is currently testing a secular breakout level, a technical indicator suggesting significant upward potential. If silver can break through the psychological barriers at $29.79 and $30.00, it could trigger a strong bull run. The next targets would be $32.15 and $35.40, which were highs from 2013 and 2012 respectively. Additionally, the broader economic environment is favorable for silver. With global inflation concerns, geopolitical tensions, and a shift towards precious metals as alternative investments, silver is positioned well for a significant price increase. The combination of these factors creates a perfect storm, indicating that silver's breakout could be imminent, making it a prime asset for investors seeking substantial returns.
It's like any asset. I mean, the housing market or the wheat market or the silver market or any market, if you have, you can make a poker analogy. And if you're sitting at the poker World Series and you sit down at the table initially and you get $100 and I've got 10,000, I've got a lot better chance of winning than you do, because when I get the good hand, I can really wipe you out pretty easily because I own most of it. So it's a control thing. I mean, I take the stock market. I mean, some of these companies that are owned by, these huge Black Rocks and State Street and these others, I mean, they basically control the market because they control the majority. I mean, you as a shareholder might, get your proxy and make your vote and vote for whoever on the board of directors or some direction the company should take on ESG or whatever, but it's almost meaningless relative to the big players. So unfortunately, it's a momentum. It's a situation where if you own, the vast majority, you have the most votes, you get to steer the ship, and you have most of the control. Folks, and either side doesn't really understand it. I would try to keep it as simple as possible. It started off as a currency peer-to-peer. And then when that morphed because of speed, time delays, clearing, and all that, it was apparent to the obvious that it really didn't work as a peer-to-peer settlement. And so now it's just this great asset that you just hold on to and you never sell because it's always going to increase in value. And so far, that's been pretty much true. I will not, try to be objective here, but you don't want, if you want a currency, you want something that's instantaneous and easy to transact and no holding charge. I mean, I think the cost, and it depends what Google or what search engine you use. Google would get one price, Bing another, DuckDuckGo another, but looks like it's about $10 a transaction. So am I going to go into Starbucks, buy a $6 coffee with a $10 transaction and have to wait 10 minutes for the transaction to clear? No, I'm not. So it's lost that idea. And that was, according to the way I read the white paper, which I have read, that's the original idea. It was peer-to-peer settlement process. That was free of anybody's interference. That was anonymous. And a great
to fully
idea.
appreciate the current potential of the silver market,
that's not what
it's
is
essential
today.
to look at historical comparisons, particularly the setup from 2010-2012. During that period, silver experienced a dramatic bull run, surging from around $18 per ounce to nearly $50 per ounce. This explosive growth followed a prolonged period of price consolidation, similar to what we're witnessing today. The 2010-2012 silver rally was characterized by a boring market setup, where prices remained relatively stagnant for an extended period before breaking out. This pattern is repeating itself now, with silver having undergone a long consolidation phase. Such periods of inactivity often precede significant price movements, as the market builds up pressure that eventually leads to a breakout. The current silver price chart is remarkably similar to the pre-2010 setup. The market conditions, including a lack of speculative positions and strong fundamentals, mirror those of the past bull run. During the last rally, once silver broke through key resistance levels, it quickly accelerated to new highs, fueled by increased investor interest and market momentum. Today, if silver can surpass the critical levels of $29.79 and $30.00, it could trigger a similar explosive move. With targets set at $32.15 and $35.40, and potentially higher, the market is primed for a significant rally. Historical patterns suggest that once silver starts to move, it can gain momentum rapidly, driven by both technical factors and renewed investor enthusiasm. By understanding these historical parallels, investors can better grasp the potential for silver's future performance. The similarities between the current market setup and the 2010-2012 bull run provide a compelling case for a forthcoming surge, making this an exciting time for silver holders.
Video on, the gold's there. I don't know if it is, but I suspect it may not be. There's a guy named Bill Still. You can look him up. He did a pretty good analysis on what the gold situation in Fort Knox is. And let's just look at it the other way. Let's say all the gold that's purportedly in Fort Knox, I think right now it's like 263 million troy ounces is there. Location doesn't prove ownership. So every ounce that's on paper could be there, but yet it could be loaned out, it could be swapped out, it could be used as collateral for foreign exchange purposes. It could be, something that's used by the funds protection team. So there's a lot to it, a lot more than seeing a line item written down on an official document that says U.S. gold ... and puts a number out there. I mean, I don't buy into that. For me, I want a strong audit. I want to see really, not only where it's located, but who's the owner of it. So I doubt that we have it all, the U.S., as far as ownership of it. Location, maybe. I actually doubt that as well, but not that that's that important, because it's not. It's the ownership. And that one isn't that hard to do, but yet the audit, I think the last time took place was in a full audit, was in like the early 50s. So it's been a long time. If it's all there, well, it's too expensive. Come on, folks. It's not too expensive. You guys, you Congress critters are spending $10 billion a day. So it's not going to cost $10 billion to do a complete audit of the gold in Fort Knox. Let's get realistic. Let's do one, and let's put this idea to rest so that Jeff and I can both agree that a full audit's taken place.
One of the most compelling reasons to be bullish on silver is its current valuation relative to gold. Historically, the gold-to-silver ratio has been a reliable indicator of silver's potential upside. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Over the past 50 years, this ratio has fluctuated widely, but it often signals significant moves in the silver market. Currently, the gold-to-silver ratio is above 80:1, suggesting that silver is extremely undervalued compared to gold. This high ratio indicates that silver has much more upside potential. Historically, when the ratio reaches such elevated levels, it often precedes a substantial rally in silver prices. For example, during the silver bull run from 2010-2012, the ratio dropped significantly as silver prices surged, narrowing the gap between the two metals. The dynamics between silver and gold are further influenced by market perceptions and investor behavior. Gold is often viewed as a safe haven asset, attracting conservative investors looking for stability. Silver, on the other hand, is seen as both an industrial metal and a precious metal, giving it a unique dual role. This duality can lead to more dramatic price movements in silver, especially when economic conditions favor precious metals. Moreover, the current economic environment supports a bullish outlook for silver. With rising inflation, geopolitical uncertainties, and concerns about the stability of fiat currencies, both gold and silver are attractive investments. However, silver's lower price point and higher volatility offer greater potential for significant gains compared to gold. Investors are also looking at the industrial applications of silver, which add another layer of demand. As a key component in technologies such as solar panels, electric vehicles, and electronics, silver's industrial demand is poised to grow. This increasing demand, combined with the metal's undervaluation relative to gold, sets the stage for a robust bull run. In conclusion, the gold-to-silver ratio and the unique market dynamics of silver position it for a potentially explosive move. As gold continues to attract attention as a safe haven asset, silver's undervaluation presents an opportunity for substantial gains, making it a compelling investment choice for those looking to capitalize on the next big market shift. The 2010-2012 silver rally was characterized by a boring market setup, where prices remained relatively stagnant for an extended period before breaking out. This pattern is repeating itself now, with silver having undergone a long consolidation phase. Such periods of inactivity often precede significant price movements, as the market builds up pressure that eventually leads to a breakout. The current silver price chart is remarkably similar to the pre-2010 setup. The market conditions, including a lack of speculative positions and strong fundamentals, mirror those of the past bull run. During the last rally, once silver broke through key resistance levels, it quickly accelerated to new highs, fueled by increased investor interest and market momentum. Today, if silver can surpass the critical levels of $29.79 and $30.00, it could trigger a similar explosive move. With targets set at $32.15 and $35.40, and potentially higher, the market is primed for a significant rally. Historical patterns suggest that once silver starts to move, it can gain momentum rapidly, driven by both technical factors and renewed investor enthusiasm. By understanding these historical parallels, investors can better grasp the potential for silver's future performance. The similarities between the current market setup and the 2010-2012 bull run provide a compelling case for a forthcoming surge, making this an exciting time for silver holders.
25, 24 years ago. Anyway, right now, from the latest report out on the 23rd, futures only, you've got the trading funds at 86,000 contracts long and 26,000 short. So you do that quick arithmetic, you're looking at 60,000 long. That's kind of the upper end of the extreme. Usually it's 50,000-ish. It's 10,000 above that. You look at the commercials, the ones that control the market, the major banks, bullion banks, and their cohorts, they're 120,000 contracts short and only 43,000 long. So there again, you've got a pretty big overhang of paper silver overhanging the market without much more ammunition. What's ammunition? It's what an investor uses or talks about in slang terms as dry powder, new money. And in order for this market to move much further, you need new buying pressure. And it's already come off. We haven't seen any increase in buying pressure. In fact, selling pressure, that's why the price is down. So, from that perspective, Elijah, I totally agree. I think we're going to see more downside than upside based on the latest commitment traders.
Looking to the end of the year, you're saying, though, that this pullback is going to be short-lived. So what kind of time frame are you looking for until we continue to see higher prices?
Yeah, of course, short and long relative. So I see the market from the construct right now, both in the physical realm and in the futures markets, going into the summer's doldrums, meaning that the metals pull back in the summer, as they almost always do. And then there's a gap in the chart for silver at 26 something, 30, I believe, somewhere in that. I expect that gap to be filled. I don't expect it to go a lot below that, maybe 25 or so. And I think that'll take most of the summer. The old adage, sell in May and come back after Labor Day. So I think that'll hold for the metals as well as the general stock market. And we'll be able to come back in probably late summer, early fall. And we'll start to build from wherever we end up, back up. And of course, the black swan factor is always out there. We always have to think about it. That could change everything almost instantly. But barring that, I think we'll get a down market through the summer months and up market starting in the fall. I think it'll get a pretty good run at the end of the year. It'll be really interesting to see what happens going toward the November election. How much turmoil, consternation, what's going on with not only market activity, but the rhetoric from the mainstream press, the mainstream financial press, the world commentary on the U.S. election. A lot going on this year. I think the best thing to do is be balanced. You need some precious metals. You don't have to overload, but you don't want to be underweighted.
Several global economic factors are converging to create a highly favorable environment for silver. These factors include inflation concerns, geopolitical tensions, and shifts in investment behavior, all of which contribute to the growing appeal of precious metals. Inflation concerns. Rising inflation is one of the most significant drivers of silver prices. As the cost of goods and services increases, investors seek assets that can preserve their purchasing power. Precious metals like silver are traditional hedges against inflation. With recent softer-than-expected CPI reports, the market anticipates continued inflationary pressures, making silver an attractive investment. Geopolitical tensions. Geopolitical instability often leads to increased demand for safe haven assets. Current global tensions, including conflicts in various regions and uncertainties surrounding international trade agreements, are creating a climate of fear and uncertainty. In such times, investors flock to precious metals to protect their wealth. Silver, with its dual role as an industrial and precious metal, stands to benefit significantly from this flight to safety. Shifts in investment behavior. The investment landscape is shifting as traditional assets like stocks and real estate face volatility and potential downturns. This shift is prompting investors to diversify their portfolios with alternative assets. Silver is gaining attention not only for its potential price appreciation, but also for its role in emerging technologies and sustainable industries. The growing interest in renewable energy, electric vehicles, and electronic devices is driving industrial demand for silver, adding to its investment appeal. Central bank policies and currency stability. Central banks around the world are adopting accommodative monetary policies, including low interest rates and quantitative easing, to support their economies. These policies often lead to currency devaluation, further increasing the appeal of tangible assets like silver. As the dollar weakens, silver prices are likely to rise, providing a hedge against currency risk. Supply constraints and market manipulation. Silver supply constraints, coupled with market manipulation theories, add another layer of complexity to its price dynamics. The limited availability of physical silver and the potential for market manipulation by large financial institutions create a scenario where prices could spike dramatically under the right conditions. This adds an
meaning this bull market that we're still in and had a long pause for a decade or more. But if you look at when Mike Maloney started, Mike did something that was way outside the box for almost anybody else I know. And what he did was he wrote a letter to Robert Kiyosaki on the flight back from GATA 21. And we had breakfast that morning. And he made a case, a very strong one with Robert, about real estate to gold. And it caught. And it was perfect timing because Mike said, real estate's overpriced, metals are underpriced. You ought to consider switching out of one asset, not totally, but, lightening up on one and building a position in the other. And it couldn't have been more correct. Well, I look at that as a small analysis to what's going on in China. China has real estate. Well, if Evergrande and all these other big firms in China with these ghost cities and these apartments that are half built and all the, let's say, real estate failures, they did a switcheroo from real estate being the most stable, best investment you can make and move back into gold. And that's a 1.4 billion population. So I think that's what's really going on. I think it's not so subtle, but I don't think too many, I'm probably the first one on your show to say it. Call them as I see them, as you well know, you've known me for years. And that's how I see it. So it could be a lot bigger than, the Chinese like gold. If their whole consciousness and investing shifted from gold better than real estate, we're just getting started. I actually put up a post, you might have seen it on Twitter, but the Chinese go crazy in quotation marks for gold. From my experience, I lived in San Francisco. I've been to Chinatown many times. I love the Chinese. It kept me so politically correct, but my take is they take a pretty strong view on being risk adverse. There's a lot of gambling in the Chinese community. If you're going to speculate in, penny mining shares, that's sort of a gambler's mentality. My point being is I think it's just getting started. I think it's a true change. If I'm right, that big parabolic move I keep alluding to could be fueled primarily by the East, not the West.
The bullish sentiment surrounding silver isn't just speculative. It's backed by expert opinions and technical forecasts. Renowned analysts and market experts, including David Morgan, are predicting substantial gains for silver, highlighting a confluence of factors that support this outlook. David Morgan, a prominent precious metals expert, has been vocal about his bullish outlook on silver. He predicts that silver could reach $1,500 per ounce, driven by a combination of inflation, currency devaluation, and a surge in investor demand. Morgan's insights are rooted in both historical analysis and current market dynamics, making his forecast particularly compelling. Technical indicators also support the bullish case for silver. Analysts point to key levels that silver needs to surpass to continue its upward trajectory. Currently, silver is testing critical resistance levels around $29.79 and $30.00. Breaking through these levels could set the stage for a rally towards $32.15 and $35.40, with longer-term targets even higher. The lack of speculative positions in the silver futures market is viewed as a contrarian indicator. Historically, When the market is quiet and speculative interest is low, it often precedes significant price movements. This setup suggests that silver is primed for a substantial rally as new investors enter the market, driving prices higher. Financial institutions are also recognizing silver's potential. Reports from major banks and investment firms highlight the undervaluation of silver relative to gold and other assets. These institutions point to the gold-to-silver ratio, which suggests that silver has considerable upside potential. As institutional investors increase their exposure to silver, it could lead to significant price gains. The overall market sentiment towards precious metals is increasingly positive. With economic uncertainty and inflationary pressures, both retail and institutional investors are turning to silver as a safe haven asset. This growing demand is expected to support higher prices in the coming months. Experts also draw parallels to past bull markets, where silver experienced explosive gains after prolonged periods of consolidation. The current market setup mirrors these historical patterns, indicating that a similar breakout could be on the horizon. Historical analysis shows that once silver begins to move, it often does so rapidly and with significant momentum. Long-term projections for silver remain highly optimistic. Analysts forecast that if silver can break through its current resistance levels, it could potentially reach $50, $100, or even higher over the next few years. These projections are based on both fundamental factors and technical analysis, providing a robust framework for silver's future growth. In conclusion, the convergence of expert opinions and technical forecasts paints a bullish picture for silver. With influential analysts like David Morgan predicting significant price increases and technical indicators supporting a breakout, the outlook for silver is highly promising. As investors seek safe haven assets amidst economic uncertainty, silver stands out as a compelling choice with substantial upside potential.
Days, there was a front page business of the LA Times, and it showed the stock market doing this, parabolic move. And basically the commentary on that particular day was that, how much higher can it go? And the answer is it was about double from there. So once these really extreme moves go, they can really go no matter the market. I think the reason I'm still so bullish is because there aren't too many investments outside of the cryptos that are true alternatives to the conventional real estate, bonds, and stocks, unless you own a business or something, own the business rather than own stock in a business. So I think there'll be more frightened capital that'll move out of conventional investments and into the metals than ever before. Certainly the money supply is bigger than it's ever been on a global basis. And it's a world market, not just a bunch of Americans that are concerned about us, bifurcating from a sound money system into a fiat-only system. And in those days, since I was aware of it, I participated or whatever, that's such a small percentage of the population. Today, almost everybody knows it. They may not have taken action yet, but they have the ability to take action more quickly than ever before. It's a mouse click and you can buy a gold stock. It's a mouse click and you can buy from Miles Franklin, for example. I think their website's up. I'm not sure, but it's at least a phone call. There's not much to it. Whereas the old days, you look it up in the yellow pages, get in your car, drive down there, and you're giving the guy hard cash, and is that a real piece of gold? I've never seen one before. All the stuff that goes into it. So I do expect once that move begins in earnest, where we get into kind of the panic move, where the fear of missing out takes hold of the consciousness, and it's global rather than national, I still expect to see some pretty spectacular moves in the metals. Where's that? When is that? Where is it? It's global. When is it? I don't know. I don't think it's this year, but I think it could begin this year.
Potential risks and considerations are essential to keep in mind as we look towards silver's promising future. While the market setup and expert opinions are overwhelmingly bullish, it is crucial to acknowledge the potential obstacles that could impact silver's price trajectory. Market volatility is a significant factor. Precious metals, including silver, are known for their price swings. Rapid changes in market sentiment, economic data releases, and geopolitical events can lead to sharp price movements in either direction. Investors should be prepared for potential short-term corrections even in a long-term bull market. Another critical risk is the potential for a stronger US dollar. Although current trends suggest a weakening dollar, Any reversal in this trend could apply downward pressure on silver prices. Factors such as improved U.S. economic data, interest rate hikes, or unexpected geopolitical stability could strengthen the dollar, making silver less attractive as a safe haven asset. Additionally, changes in industrial demand could impact silver's price. Silver's dual role as both an industrial metal and a precious metal means its price is influenced by economic conditions affecting industrial demand. A slowdown in key industries such as electronics, solar energy, or automotive manufacturing could reduce demand for silver, potentially capping its price growth. Market manipulation theories, while often debated, also pose a risk. Large financial institutions and central banks have significant influence over precious metals markets. Allegations of price manipulation could lead to unexpected price movements and undermine investor confidence. Regulatory changes are another factor to consider. Government policies and regulations impacting precious metals markets can have profound effects on prices. Changes in tax laws, trade policies, or mining regulations could either boost or hinder silver's price performance. Lastly, investor sentiment and behavior are critical. While current indicators point towards a bullish outlook, shifts in investor sentiment can occur rapidly. Factors such as market trends, economic outlooks, and news events can influence investor behavior, potentially leading to increased selling pressure. In conclusion, while the outlook for silver remains highly promising, investors should remain vigilant and consider potential risks. Market volatility, a stronger dollar, changes in industrial demand, market manipulation, regulatory changes, and shifts in investor sentiment are all factors that could impact silver's price trajectory. Staying informed and adopting a balanced investment approach can help navigate these uncertainties and capitalize on silver's potential while managing risks effectively. As we bring all these factors together, it's clear that the potential for silver to reach $1,500 per ounce is not just a wild dream, but a possibility rooted in substantial economic and market dynamics. The convergence of inflation concerns, geopolitical instability, and shifts in investment behavior sets the stage for a significant bull run in silver. David Morgan's prediction aligns with historical patterns and current market setups, indicating that a massive price surge could be imminent. The current technical outlook for silver, with key resistance levels poised to be breached, combined with the lack of speculative positions, creates an ideal scenario for a powerful upward movement. The gold-to-silver ratio further underscores silver's undervaluation, suggesting that silver has considerable room to grow relative to gold. Moreover, global economic factors, such as central bank policies, currency stability, and industrial demand all point towards a bullish future for silver. As traditional assets face volatility and potential downturns, silver's appeal as a safe haven and industrial metal is stronger than ever. However, it's important to remain aware of potential risks and market volatility. While the overall outlook is positive, investors should be prepared for short-term fluctuations and consider the broader economic landscape when making investment decisions. In conclusion, the possibility of silver reaching $1,500 per ounce and offering early retirement opportunities for investors is grounded in robust analysis and expert predictions. As we navigate through these exciting times, staying informed and strategic will be key to capitalizing on this unprecedented opportunity. Make sure to subscribe to our channel for more updates and insights on the silver market. And remember, this is not financial or investment advice. Always do your own research and consult with financial professionals.
And put up on the web. I think there's a favorites button. If you want the crypto conspiracy, just type in crypto conspiracy. There's 29 of them, I believe. I'd recommend the first one, the fourth one, the 14th one, and maybe the last two. Kind of that could, you don't have to watch them all. I think the fourth one's pretty interesting because there's ties to some of the biggest founders of Bitcoin that we know of. Satoshi Nakamoto does not show up, but you look at some of the MIT connections, Bill Gates connections, Ito, some of these folks that are out there that are way high up the food chain in Silicon Valley and MIT. It's quite fascinating who's connected to who. And Kurt Wuckert is the number 14 interview. And John Perez and myself have done a lot of research, a lot of groundwork, a lot of digging, and came to some conclusions. And Kurt is an archivist. And so I brought him on to say, am I right? Am I wrong? And I'm open to being wrong, believe me. And he said, no, you pretty much nailed it. And I noticed on his YouTube channel, I think it was only a week or two at the most, go Elijah, he's got a book. I don't know if he wrote it or not. I retweeted it pretty quickly, but it goes through what we've been talking about how it's been basically usurped, and it's different than what it was, what it was proposed to be in the early. Too much tugged one direction or the other. You don't have to be apolitical, but you don't have to put your life into someone outside of yourself. I think faith really starts with something more spiritual rather than what man can do for man, what we can do individually and in our community, and control what we can, eat to your best ability, stay balanced, keep your friends close, keep your community close. In other words, use your heart more. I think, we get in our heads, especially in the West, of what's wrong. And of course, I'm guilty of it as well. But when it comes down to it, your memories are all you have at the end of the day. And that's where you want to put out, your personality, your essence, your being to others to just make a great day. I mean, you can make, most of life is what you make it. And if you go with a chip on your shoulder or a bad attitude because somebody in the political scene pissed you off, you're ruining your own day. Just let that go. Don't pay that much attention to it. Just move on and do what you can. That'd be my advice.